Hello, everyone. Thank you for attending this Stampede. My name is Stephane Blanchoz, and I'm heading the SME Alternative Financing desk in BNP Paribas Asset Management. So the idea of this short presentation is to tell you a bit more about this activity, which aims at financing SME on a large scale, and to understand to what extent blockchain could be a problem solver in this business. So let me share my screen so that you will have this presentation, this short presentation, to explain to you what is SME alternative financing. So in a nutshell, we have to come back to the new paradigm, which basically is the way SMEs are being financed. And you have to come back to 2008 and the great financial crisis to understand all the current developments in fintechs. So in a nutshell, you have banks who are forced to disintermediate, which means they cannot do all the SME lending in the world themselves. You have investors who have big incentive to lend to SMEs, big fiscal incentive, regulatory incentive, which helps financing SMEs outside the banking system. And you have borrowers, who are SMEs in particular, who now have access to different sort of lending, which means you don't necessarily have to go to your bank to get access to finance, and we'll come back to that. So this new environment, how does it affect the financing of small and medium enterprise, what we call SMEs? These small companies, usually when they need money, they go to their bank, which is the normal way to get access to finance. But if you look in Europe, for instance, at the number of companies that you can see in this pyramid, you have around, let's say, 24 plus 25 million companies in Europe. And these companies can have access to banks, right? But actually, outside the banking systems, you had few options a couple of years ago. Now, on the top of the pyramid, you have the large companies and the one that can access private, public markets. They can issue bonds, they can issue leverage loans, they can go even to the private markets to get private placements, but the average size of these companies, when they ask for money, is pretty large. And this only is a small numbers of companies we're talking about here. At the opposite end of the spectrum, you have the very small companies. And these companies now, they can have access to peer-to-peer type of business lending solution. You have different companies, Funding Circle, for instance, in the UK, very large one, that is a solution for these small companies that would look at getting access to finance outside the banks. Now you have numbers of companies that are, let's say, too big to get financing through the platforms and too small to get financing through the capital markets or through private placement. And the idea of the business I'm heading is to provide, in a large scale, loans between 500,000 euros to 5 million euros in Europe to these companies. And the whole idea behind is it possible to scale the lending process when you deal with so many companies and you need to really have a great understanding of the credit risk you're taking? So we'll be using different techniques, different technologies to try to assess the risk. When you assess the risk for large companies, you can take your time because this is it's a very long process. And you need a lot of information that you digest. And between the time the companies ask for money and they get access to financing in public markets or even in private placement markets, can take up to 6 months. For the small companies, well, they can go to the platform and it's a kind of statistical lending. The risk is not really assessed in a great credit way, but it's, I would say, good enough when you build large portfolios and you play the statistics. But for these companies that requires $1 million or 2 million, it's very hard to spend 6 months analyzing these companies, and you can't afford making a mistake for this type of amounts. So the idea was to say, we have today a digital transformation that should help us assessing the risk and scaling this lending process. So what are we talking about? We're talking about different techniques, APIs to get access to information of these companies. And information is really important here. We have access to a lot of big data, which helps us building models to try to calculate a probability of default based on numbers of historical data, of historics. And I can come back to that a little. And with these different elements, you should be able to get an idea of the risk you're taking when you're lending to companies. In a nutshell, our business model is to say, well, how do you get access to SMEs? We get access to SMEs through banks. We can get access to SMEs through fintechs, alternative lending platforms. Because the idea for us is to say, if they go to the platform to get small amounts, if they require larger amounts, well, maybe we can serve them. So it's a way for us to access to SMEs. Or the SMEs can go to their local partners, their accounting firm, their small KPMG that they're working with. And these partners will actually go to our environment to upload information. And after, when we have access to things we need, we can be very quick in terms of decision making, risk assessment, and lending process. In the heart of our engine, what we the credit process, we have credit models that tells us on a statistical basis if we can, what is the type of risk we're taking if we lend to a company that has particular characteristics. So basically, we have developed our own credit scoring, taking into account not only quantitative data, but also qualitative elements, try to assess the quality of a management, try to assess the business they operate, and different vectors. And after that, we can say, okay, we lend and we take it in our own balance sheet. We have a warehouse capacity that enables us to take the risk. And after that, we build investment solution with all these loans to actually give access to these loans to investors. Could be individuals, but most of the time, this is pension funds, insurance company that can have access to these loans that we try to scale and build for them. So the whole idea here is about scalability. We try to scale the lending process from end to end, from A to Z, meaning that when a borrower is actually trying to ask for money, going to its bank, going to a platform, going to their accountant, there is a possibility it comes to us because we partner with these people and they will upload information so that if we get what we need, we can take a quick decision. And after, we can settle in a pretty efficient way within a couple of days. And this makes a big difference because this company, for 1 or 2 million, they are used to a pretty heavy process. So we try to scale it, and my team is organized with tech people that we are working with our own system, with our own credit modeling capacity, credit professionals that help us assess and tell us how to systematize, to automate this type of process. Origination partnership people, that means people that liaise with all the different partnerships we could make to get access to SMEs, and loan closing professional, which means people that will look at a lot of things before releasing the money. It's linked to the administrative aspects of things. So we have many challenges. First, it's access to information. We need to have access to financial information, non-financial information, KYC. Why do they come to us? Why can't they get this money out of their bank? We need to build a great SME experience. They need to actually go online, have a great customer journey, and we need to explain to them who we are, how we behave. They're not used to have a lender that is not a bank. We need to take attention to the decision process. We use quantitative modeling, but also we have qualitative elements. And above all, we need to industrialize. We need to think about how best can be the operational framework, the legal aspects, the servicing aspect, the monitoring elements. We're working with partners for that. But as you can see, when you make a loan, you have a lot of data to analyze and a lot of stakeholders. We do even assess, for instance, the ESG aspect of companies, which is their governance, how they behave on the environmental front. And we have numbers of specialists for that. But the idea is, can we have all these stakeholders giving this information in one place? And that's where, for me, blockchain could be a solution. Keep in mind that for people doing the kind of work I'm making, which is trying to disrupt the SME financing and giving access to different type of financing to SMEs that are not well served by banks, is pretty challenging. And most of the time, there is not a question about blockchain. I remember being in a conference a couple of years ago when people were saying, well, what is blockchain? Blockchain might be a solution to a problem we'll struggle to find. I have a slightly different view today, because I think tokenization for me is twofold. One is it helps you getting all this information in one place. That's really important, and numbers of information that could be difficult for an investor to assess. We have a quantitative scoring. We could be transparent and give the result of the scoring. We can give all type of information related to this company. And we could also have, I mentioned the ESG aspect, somebody having an opinion on ESG that is being reviewed every month or so. And actually, if you tokenize these aspects, you would benefit from a regular update on everything. So there's two elements. One is the fact that you have a lot of information in one place. And the second is you have many stakeholders that can modify the data to the benefits of the whole community, the whole stakeholders. So what is the benefit for that? Well, the solution to better manage your data brings flexibility, brings speed. We often say liquidity, though it's a bit challenging. It's a way to say, if you have all this information, people can take decision based on things that are moving, but everybody is aware of this movement at the same time. So it's better inclusion in terms of financing, because at the end that could enable people that have a large amount of money to deploy to flow that in the real world, in the real economy, in the SMEs that are really the backbone of our economies. But we still have many challenges. How to define all the vector that we want to see when you take a decision on SME. Who will be in charge of updating the data? There might be confidentiality issues, GDPR issues. So all these are challenges. I do not have the answer yet, but I believe blockchain could actually be part of the solution for a better administrative treatment of all these lending aspects, especially for SMEs, which once again is really the backbone of the economy, and we want to make a difference with our own lending process. So as a conclusion, you have an environment today in terms of financing the economy that is biased towards more disintermediation. And alternative financing, there are solutions for large corporate and very small companies. We try to build a model that can offer a faster and simpler way to access funding for these underserved SMEs. There are new models that are going to emerge. We're one of them, and we've built it in the last 2 to 3 years, and we've now made over 100 million of loans to these SMEs, mostly in the UK, in the Netherlands. And we have many challenges that we'd like to address, and we believe that blockchain can be a tool for us to further industrialize our lending process. It's not the solution to everything, but it's definitely a tool we'd like to know more and to investigate to what extent it can help us to further industrialize our process. To that note, I'd like to hand it over to Emeric, which will go in further details into what tokenization means and how it can help SMEs have access to financing. And I'll be happy to answer any question after that. Thank you very much.
Thank you, Stephane. Hi, my name is Emeric Levy. And I'm really happy to be with you during this conference. In addition to what Stephane has just said, I will take 5 minutes to talk about how blockchain could help to fund SMEs. But keep in mind that the answer is more complex than blockchain, because it relies on how we conceive our relationship to money, how we conceive the notion of long-term investment, how we conceive our role in our community and its economic prosperity. So to answer this question, we need to look at what blockchain can do for us. First of all, blockchain can build a trusted environment, as you can see on those pictures, with no trust, there is no value. The second thing is that blockchain can help to build a transparent and balanced finance, which means that we know what has been done with our money. Above all, it means that we can channel investment toward the real economy and probably less towards derivatives, which are weapons of massive destruction. Blockchain will bring advantages inherent to its technology. For example, you can digitalize assets, so you may have heard of security token offering. You can automate processes. You can build safety on encrypted data. You can build specific consensus. You can rely on transactions which are irreversibles and immutables. You can have the option of building decentralized autonomous organization. And also, if you want to, you can build mutualized tokens which are backed by assets. But the last and not the least is that you can agree on valorization algorithm and understand them. Blockchain will deliver a lot of benefits. For example, when you talk about transparency, what does that mean? It means that everybody can have the same level of information, the same level of data. It means that you get that data at the same time for everybody. It means that you can build something on the power of collective intelligence. It means also that you rely on the efficiency of open governance. When it comes to cost reduction, it means that blockchain allows you to cut out processes. You will increase productivity and speed. You will have easy and cheaper access to markets. And at the end, you don't have to pay a middleman, or if you pay them, you pay less. In terms of security, something which is inherent to blockchain brings already security. But there's also security in terms of investment, which means that you have tokens, for example, which are backed by real assets. It means also that you have a risk which is mutualized, and also you limit the risk of fraud and of loss. With blockchain, you build a new mindset. It means that you take control of your money. It means that you have all the information and data you need to take better decisions. You have a better ownership, and also you have a better trust in the information and operation you do, which means that also you build that trust. And on the other hand, blockchain will help to build new markets, new business, because it increases liquidity, because you have fractionable investments, which allow more people to invest in. You can, if you want to, smooth the volatility and speculation, and you give access on both sides to a global market. At the end, the blockchain helps to solve the investment triangle. It means that you can search for profitability, but on the other hand, you solve the problem of security and trust, and you also build value. You create that value, which can be financial value, but also environmental value, societal value, and also governance value. How does it work? So I put this to go through quickly, because if you want to have some example, you can go and see those sites, okay? But what I want to show you is that, okay, you can start from a community of investors, owners, developers. You can agree on a project, on an agreement. So how does it work? This graphic shows you how you can automate all the process. from the gathering of the community of investors, from the agreement on a common project, from the platform which handle all the process, then the distribution of equity, and also the important part of smart contract who help to deal with all the factor of, for example, a security token offering from the issue token, but also dealing with entry clauses, exit clauses, governance criteria, and doing the fact that all the information is available and is distributed. At the end, as a conclusion, I would say that blockchain, whatever the forms is going to be, either STO or something else, offer promising funding alternatives, which could reach $9 trillion. It offers potential for trust, for transparency, for reliability that can convince investors to channel a share of their investment into SMEs. But blockchain is not a standalone technology. It needs to be combined with others to make it accessible, to facilitate adoption, and also to multiply the users. And finally, we need to answer two questions. The first one is, are there entrepreneurial investors who want to invest in the long term? And on the other hand, are there SMEs that want to opt for transparency and new way of governance? Thank you. And now with Stephane, we're going to answer all the questions you may have.